Good afternoon. I'm Steve Ferrazzani, an analyst at Sidoti. Welcome back to Sidoti's virtual investor conference. I can still see there's a few people coming into the room, so I'll give it a few seconds. But while I have this additional time, let me just mention that if you do have questions, we do expect a little bit of time following what I think will be a very informative presentation. If you have questions, you just press that Q&A icon at the bottom of your screen, type in the question, and we'll get to absolutely as many questions as we can, time permitting. I don't want to take up any more time. Excuse me. I'm so pleased to welcome Copper Fox Metals. It's their first time at the Sidoti conference. Happy to have President and CEO Elmer Stewart with us. With that, let me turn it over to you, Elmer.
I thank you very much. Yes, as said, my name is Elmer Stewart, and I'm the President and CEO of Copper Fox Metals. And we're a North America-focused copper exploration and development company. This slide shows you the projects which we're involved in across North America, and it also shows you the various exchanges in which we are listed on in Canada, US, and in Germany. This is our forward-looking statement, and it's required by legislation. And a lot of the things we do, we make the best forecast we can, but there's no guarantee they're going to come out the way we predicted them. So read it very carefully. There's a lot of important information in this slide. There's a little bit about the capital structure of Copper Fox Metals. We've got the management listed there. The board of directors are listed across the bottom. The interesting thing here is the share ownership of the company. The insiders own about 58% of the company. That's been essentially accumulated since 2009 through the way of private placements and open purchase in the market. It also shows you our corporate structure, where we have each one of our projects are located in a wholly owned subsidiary, and that was more for businesses and taxation purposes. A little bit about the copper outlook, and we are a copper-focused company only. There are numerous forecasts out there about copper demand in the future, but I think if you sum it all up, everybody will agree the demand for copper is going to go up in the future for a number of reasons. And there's a lot of factors that can impact that, like price volatility will slow it up, speed it down, depending on what's going on with the major economies. Demand factors, there's numerous demand factors out there that are always demanding more copper. But as I've said on a number of occasions in the past, the big issue that's facing the industry, can the industry provide the copper that these future forecasted demands meet? And I think that is where the issue is going to be down the road. Can we provide the copper? And again, we've listed a number of reasons why we think there could be a little bit of a chink in there on the supply side. A little bit about the company itself. We're an exploration and development company. We're focused on large, low-cost porphyry copper systems in Canada, the United States. We like those two jurisdictions because geopolitical stability and very, very good from a logistics point of view. We have a very favorable joint venture resource with Teck Resources Limited on our Shaft Creek joint venture. That's 75% owned by Teck, 25% by Copper Fox. We have two projects at the preliminary assessment stage. This was done in 2020 for the Van Dyke and 2021 for the Shaft Creek joint venture. Essentially, those two combined at our share, it's about $855 million US on an after-tax discounted basis. So added a lot of value since 2012. The Shaft Creek and the Van Dyke project are advancing toward the preliminary feasibility stage. And what that is just one step level above from a technical standpoint, over and above what you get in a preliminary economic assessment. Of the three projects, we have 5 projects in total. Of that, 3 of them are in the mineral resource stage. They had significant resources on each and every one of them, and there's a considerable amount of resource expansion potential. We've listed here the billions of pounds of copper in the measured and indicated category, and the billions of pounds of copper in the inferred resource category. We've also, in brackets behind that, put the copper equivalencies to take into account the additional molybdenum, the gold, and the silver that we have in these various resource estimates. We also have two exploration stage projects. They're both at the drill ready stage, located in Arizona. And we've always been practicing since 2010 a very, very strong ESG policy. Why? Because we believe it's important to keep the local stakeholders and in certain areas, the Indigenous community totally involved in what you're doing as you work in and around their territories. This slide essentially shows you on the left-hand side, it's a summary of all the projects we have in our ownership as well. It outlines the type of metals we see in each one of our projects. In the center of the slide, you see 3 projects listed. Those are our resource projects. Again, we break out the measured and indicated resources, the grades in the pounds of various metals. And on the right-hand side, you'll see the area in Western North America where our projects are located. Let's start with the Shaft Creek project. As I said earlier, it's a joint venture with Teck Resources. They're the operator. They have 75%. Copper Fox has 25%. Since creation of the joint venture in July of 2013, Teck have spent approximately $98 million into the project, of which about $74 million are in what they classified as pre-production expenditures and $24 million cash, which they gave to Copper Fox on signing the joint venture arrangement. Teck is a very experienced mine operator. They have a very large project in British Columbia called Highland Valley. And if you look at the size of Highland Valley and you look at the size of the Shaft Creek project that was set out in the PEA, they're pretty similar sized projects. So it's a big project. The other thing is, the important thing about Shaft Creek is that it sits on one of the largest undeveloped porphyry copper systems in North America. And the implication of that is that it could have a very long life, quite important in the mining industry. The PEA in 2021 was done using conservative metal pricing based on long-term consensus prices. And it yielded an after-tax NPV of US $842 million. And when you compare that to the after-tax value that was done in the feasibility study in 2012, that came up to a total of $64 million. So clearly, the work that was done by the joint venture added a substantial amount of value to the Shaft Creek project. Interestingly enough, that PEA also provides identified several project enhancements which could increase the overall value of the project going forward. Readily accessible, very good infrastructure, and we have a budget of about approximately $16 million for 2025 plan. From a technical standpoint, the 2025 program is essentially $16 million of expenditures. The primary objective is to try to move the project into the preliminary feasibility stage. And what they're doing is they're compiling and reviewing a lot of work that was collected from 2021 to 2024. Let's see what that tells us. Update the models where they needed to be updated. And there will be a field portion part of the program as well. And that is to do further geotechnical investigations in the waste storage facility area and the tailing storage facility area. In addition, we intend to continue the ongoing baseline environmental studies, the archaeological investigations, and other things that required, because if you plan to move the project forward, you have to have these studies in place because of the permitting requirements that go forward. And the idea would be is to continue looking at other sites on the property to make sure that they're suitable. If you want to, if you want to move the project up into the preliminary feasibility stage. We've also showed a little bit of the information that we completed in 2024. Excuse me. This slide shows you a little bit of a comparison between the Shaft Creek project, the feasibility study was done in 2012, and the PEA that was done in 2021. Clearly, you can see there's been substantial changes from 2012 to 2021. Well, what's most importantly on the right-hand side of the slide, we showed you the project sensitivity based on increases in metal prices. And we focus primarily on the copper, the moly, and gold, because that's the three big components that essentially add the value to the project. And when you look at the slide, and the base case is done in white, in the white column, and you can see the effect on a 25-cent an increase in pound of copper, or concurrently the 25% cent a pound decrease. So clearly, what this is telling you, this project is exceptionally sensitive to metal prices going forward. The Shaft Creek joint venture, I think, is probably one of the best joint ventures out there in the junior space right now. Essentially, this is the way it looks. It looks a little complicated, but essentially what's happened is Copper Fox is not required to put any cash into the Shaft Creek joint venture. Teck Resources are required to put up the cash to carry out all the activities, and Teck can recover their investment in the Shaft Creek project from free cash flow out of the project. What Copper Fox has here is the first right of refusal or first right of offer. And what that essentially that says, when the board of directors of Copper Fox plans on, it will deliver a letter to the joint venture, and that will set out the terms and conditions of what Copper Fox would be expecting to receive by selling the 25% interest in the Shaft Creek joint venture. Let's go to our Van Dyke project in Arizona. Now, this is an in situ copper recovery project. There are several other ones in the state of Arizona. It's a brownfields project, 100% owned by Copper Fox, subject to a couple of NSRs. We did a PEA there in 2020, and clearly it returned a very, very robust economics, which gave us the comfort of saying, okay, this project is definitely worth spending more money on. So what we're going to be doing now, we're thinking about moving this project into the pre-feasibility stage. Why? Because we think it's could be a near-term mid-sized copper mine in Arizona. There's good logistics associated with it. It's mining-friendly jurisdiction, and we're looking right now at ability to move that into the PFS stage. Again, if you look at the Van Dyke, this little slide shows you the comparison of the PEA we did in 2015. It also shows you a comparison of the 2020 PEA as well. And so clearly you can see there's significant differences too. The one big change was the increase in the mine life, which added substantial value to the 2020 PEA. Now, if you show the metal sensitivities in here, you could see in base case, and again, what the effect on the project is, the 25 cent a pound increase in copper prices on the upside and on the downside. Quite significant implied value add base if you're using current metal prices today. And what we're using is $4 a pound for copper, $2,200 an ounce for gold, $23 a pound for molybdenum. Not that that applies at Van Dyke, but it certainly applies at Shaft Creek, and $26 an ounce for silver. And in situ copper recovery is not the same as conventional mine like a Shaft Creek would be. No mining, no blasting, no big open pit, no haulage, no crushing, no grinding, things like that. But what it does do, it's essentially leaching, it's not mining. And on the left-hand side of the slide, we showed you the benefits or the reduced impact on the environment from water consumption, energy consumption, GHG gas emissions. And so those clearly minimize the impact on the environment. Now, if you look at the bottom of the slide, you're going to see generally how in situ copper recovery works. Okay, it's a very simple diagram. You inject fluid into the injection well. It's a low pH solution. It dissolves the copper, which you can see in the circle there. And that's all you do is you dissolve that copper. You pick the solution up in the recovery wells, comes up to the surface. It's circulated through the SXEW plant. And then that solution is then re-injected back into the injection well. So we have several advantages what we think we've got at Van Dyke. And the geology there and the mineralogy is very, very amenable to in situ copper recovery. So we plan to do it by an underground decline. Why? Because it's less social impact, much we think it's safer, and it will avoid a number of the aquifers in and around the Miami Globe area. So at the bottom part of the slide, we show that little yellow slab you see there. That's actually the mineralized zone that we are targeting. Outlined in the blue is the phase 1 mining plan, and outlined in phase 2 is the red one. Now, let's move on to our exploration stage projects. And this is Eaglehead. We bought it in 2021. We paid $1 million for it. We own it 100%. Printed a resource statement in 2023. It's on the slide scale here for you. Indicated and inferred resources, mostly indicated, about 2/3 inferred. But one of the things that we found from this process was there's a 1-to-1 correlation between the mineralization and the chargeability anomaly. So down on the left-hand side of the slide, you can see the chargeability anomaly. That's that green, yellowish, red color. And you can see inside that the location of the various mineral deposits we have on the project. We think that about 20% of this target's been tested. And we think it's in a corridor that's about 8 kilometers long. That chargeability anomaly is at least 6 kilometers long. We like the metallurgical recoveries, as we've shown here up to the third cleaner concentrate. So clearly that's a beneficial feature. And this project has tremendous resource expansion potential. The other thing is in 2025, what we're planning to do a little bit of work there as well. Let's move now down to Arizona. We like the Arizona area primarily because it's located in what they call the Laramide copper belt of Southwest USA. And this project is Sombrero Butte. The map shows you the location of the former San Manuel Kalamazoo, a big mine that was operated and now is still owned by BHP. It's shut in for now. But most importantly, to the north of our project, you've got the Copper Creek project. That's a porphyry copper system. And the geology there continues right down through our property, which is outlined in the black and the yellow. And that's the size of the chargeability anomaly we identified in 2024. I could tell you a lot about this project, but essentially the alteration geology, the rocks, the mineral style of mineralization, the geophysical signatures tell us that we have the significant potential that there's a porphyry copper system there. It has all the characteristics of porphyry copper systems. And now in 2025, what we're planning on doing, we're gonna keep looking at that for a while and see if we can move that to the drill stage. Now, one of the things that one of the previous operators did, he actually went and drilled some of these mineralized breccias. That's the intersection you see at the bottom of the slide. Quite significant high-grade mineralization in these breccias. But those breccias aren't the target. We're using those breccias as an indicator of the potential of a porphyry system at depth, feeding those breccias at surface with the mineralization we see. So again, a pretty good indicator of that you have a buried porphyry copper system on the property. This is our Mineral Mountain project, and this is also in Arizona, and it's also located on a major porphyry copper belt in Arizona, as you can see in the inset in the top right-hand corner of the slide. What you see on the slide here is in the color patterns, that's the copper mineralization on surface. It's a modeled, and we use some software to do that modeling. The other thing you see is 3 areas of higher chargeability on the property that and they're outlined in the crosshatch, and we have 3 targets identified. What we're doing right now, we're in the middle of the permitting process. Hopefully we're getting to the end of it. We've gone through a number of the phases, and so we're hoping that we're going to be able to get that thing done within a month or 2. But there is no timeline, and so we have a few things to work out. But our the plan there would be is if once we get the permit, and if we get the permit, I can't say for sure we will, but I'm pretty optimistic we will. Then the plan there would be to move directly to a drilling program to test, like a proof of concept test, target number 1 and target number 2, and hopefully we'll get that work done before the end of the year. So essentially, in summary, for the company, we have a portfolio of advanced and exploration stage projects, and they're in geopolitically stable countries, areas. We think that the sweet spot for the copper producers are PFS level studies, and 2 of our projects are actually now moving into the PFS stage. And hopefully we'll be able to determine that before the end of 2025. Teck will make that decision at Shaft Creek, and clearly Copper Fox will make that decision at the Van Dyke project. We've added a considerable amount of copper to our balance sheet since 2012, and as well as a lot of molybdenum, gold, and silver as well. And if you're interested in looking at this, the viewers should probably visit our website. On that, we describe pretty much what we have in general, but each one of the projects has its own individual website presentation, and that gives you a lot more detail on each and every one of the projects we have. So our value today is about $855 million based on third-party, independent, technical engineering programs. And these are based on a number of assumptions, which at the time were very conservative. And clearly metal prices have moved higher than they were back when we did this. So clearly we've been able to identify and establish a considerable amount of value. Now, going forward in 2025, I'll just summarize very quickly the plans for our various projects. So the joint venture is working toward transitioning the Shaft Creek project to the preliminary feasibility stage. Copper Fox is doing essentially the same thing on its Van Dyke project because there is value to be created there. So we would be nice to just put that in. At Shaft Creek, at Sombrero Butte, we plan to do a assessment and hopefully get it to the drill stage, hopefully do some drilling at Mineral Mountain. And at the same time, Eagle Head, we're looking at doing some of the a geophysical survey. So
Excellent.
So basically, to wrap it up pretty quickly here, the investment advantage is that we have a large amount of critical metals on our balance sheet. Our projects, our 2 advanced stage projects, highly levered to metal pricing. We have significant resources and 3 properties with significant resource expansion potential. Strong outreach program around my Van Dyke project, the same thing up in our Eagle Head project. Large insider ownership, and we have a very strong team who works with Copper Fox to make this to do all the work and activities. So based on that's essentially ends the presentation.
Excellent. Thanks so much, Elmer. Appreciate the informative presentation. We have gotten a series of questions in, but I'll remind everyone, if you do have questions, we have about 5 or 6 minutes remaining. You can press the Q&A button and type in the question. We'll get to as many as we can. There have been a number of questions, Elmer, about the timing as you go into the PFS stage. How long can that be? And does it matter in one case you have control over the timing versus the partner has the control?
Yes, it does. It's actually at Shaft Creek Tech, because they have 75%. They're the ones that will make the decisions, because normally in a joint venture arrangement, it's 50-50. Now, given the tech's expertise in large scale projects like Shaft Creek, and the fact that, they operate mines already, so they'll make decisions. So clearly, if I was to give you a rule of thumb thing, how long it would take you to do a pre-feasibility study, I'd suggest maybe 1.5 to 2 years. Now, it may vary and it may not, but that's generally the rule of thumb. Going to the Van Dyke project, because it's in Copper Fox's decision making, because we own it 100%.
Yeah.
I'm not saying we could shorten that any shorter than 1.5 to 2 years. But generally, I think rule of thumb, probably 1.5 to 2 years would be a reasonable timeline to complete the preliminary feasibility stage.
Okay. Why do you have a partner in one and not the other? And what's the advantages or disadvantages?
Well, let's talk about Shaft Creek. We have a partner in one primarily because Copper Fox acquired the Shaft Creek project from Teck Resources back in 2002. And in that option agreement, Teck retained a back-in right of up to 75%. So when there was a change of control and change of management in the company in 2009, we identified this area that, until Teck makes a decision as to what they're planning and doing, we're always going to be sitting there saying, well, is tech coming in or is tech not coming in?
Right.
So what do we do? But one of the things the option agreement allowed us to do is we were to deliver a feasibility study. Then tech were obliged to make a decision whether they're coming in and then tell us what their interest would be ongoing. So we gave it to them, and within 15 minutes of giving them the feasibility study, they said, we're in for
Oh,
75%. Let's negotiate the joint venture. And as a partner, yeah, because we feel our best area of expertise is taking things to the preliminary feasibility stage. When you go to the feasibility stage, and then higher, I think that's when, certainly from my perspective, you need a serious mine operator to take it on and take the project hopefully through to fruition.
yeah. Okay. Where are you in terms of Van Dyke, and are you at a point where you would seek a partner?
We're always open to find a partner. But what we
Okay.
want, and we made it abundantly clear, we want fair value on our projects because
Yeah.
we've taken the risk, we've advanced the projects, we've materially added value at Van Dyke, and we just want to get a fair value. So if somebody was to come along to us and say, we would like to buy the project, we'd be happy to hear that, as long as we're talking
Okay.
fair value terms. Or alternatively, if somebody comes along and says, well, I'd like to joint venture that project and here's what we're thinking. Well, we would certainly sit down and have that conversation as well. So yeah, we're open for business, but we understand the value we've built up in these projects over a number of years, and we spend a bunch of money doing that. But the idea for us is we want a fair value, and if we're going to stay in a joint venture, we want somebody who's going to be a technically more savvy than we are,
Right.
preferably mine operator already, and has the financial and operational capabilities to make these projects work.
Makes sense. I got you. You did reference the lower prices that are in the more recent PEAs. Do
Mhm.
you ever update those? Because clearly copper prices are much higher now than they were when you completed those. Or is
Yeah.
the expense to do that not necessarily relevant because we can update it ourselves? It's a simple
Well,
math problem.
Well, I tell you, it's primarily a function of having the funds available to do
Yeah.
these updates. Now, being a junior, we don't have an unlimited supply of cash, but like you could do it, but if you're going to update it, then you're going to have an independent engineering firm. They're
Yeah.
going to have to walk through every phase of that study and see what the changes have been since the date of the study.
Right. It's not just a matter of changing the price. It's far
No,
more
it's not.
sophisticated than that.
But the thing is, I mean, if you take a look at Florence, we follow the Florence development that Taseko's building out. And they're really good at announcing, on a quarterly basis, well, here we're at, here's the percentage completion, and here's how much we're within budget, numbers within budget.
Yeah.
What tells us is that they're building that thing and they're probably going to be pretty close to what they forecast the budgeted amount is, which is kind of good because it tells me in Arizona for an ISCR project, the capital costs that we use at Van Dyke probably haven't changed a lot either.
Okay.
So and the other thing is too, is we're a very conservative group. And the other thing is we always use consensus metal pricing. And that usually comes out on a quarterly basis. And it's a consensus of groups around North America and possibly even Europe that come up and they get together and they say, okay, this is what we think the prices of these commodities are going to be over the next 3 to 6 months.
Yep.
So we use those numbers because you can't follow spot prices because they're like this all the time. And you can't update it every. But
No, every hour.
the reason why we provided those sensitivities is if you look at the tornado chart we put out in our news release around the Shaft Creek project, you look at that and read it, and you can get a pretty good idea as to how the value will be changing. And it's not really value; it's in the implied value because these are not operating mines. They're very detailed engineering studies on paper and using the best information the engineers have at the time to try to put a value on your project, right?
Absolutely. Makes sense. I know we are nearing an end here, but Albert, what do you think the best potential catalysts for the stock over the next year plus would be? What should we be watching for?
I think an announcement by either Tech Resources saying that they have transitioning the project to the PFS stage would be the big catalyst at Shaft Creek. At Van Dyke, I think the catalyst of when Copper Fox and the board decides to move the project into the PFS stage should be a catalyst for the Van Dyke project. The other project's not so much catalyst, it's more like advancing the projects. Like if we were to do the geophysics at Eaglehead and we do a little bit of like a small amount of drilling, which we've already have the locations of the holes planned, but we're not planning on doing drilling right now. That may change depending. And,
Okay.
can you move that project up from the exploration stage to the preliminary economic assessment stage, which is really a milestone when you think about it. So that puts a value on the property. That would be a milestone. Maybe that'll be a catalyst. But I think the big catalyst could come in the Mineral Mountain project, because if we drill that project, which is their intention, and we discover a fairly sizable body of porphyry style mineralization associated with target number 1 or associated with target number 2. That's probably going to be the first significant porphyry, Laramide age porphyry copper discovery in the state of Arizona. And some investors like exploration. Some investors like a little bit more advanced, a little bit more secure type projects. So if you look at Copper Fox, we actually offer the
Both.
investors both of those depending on what their investment strategies are.
Excellent. Well, I think that's a great way to wrap it up. President and CEO Elmer Stewart from Copper Fox Metals. Thanks very much for the informative half hour. Thanks for being here, Elmer.